Hello, traders. It's Wednesday, the 8th of April, 2020. This is episode number 1730. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This is brought to you by edgeclear.com, and convergenttrading.com. This morning, the overall market sentiment is really mixed. This morning we have the Russell up 2.43%, pretty bullish on the small caps this morning. Crude oil taking a pop higher after selling off yesterday, up 47 cents or about 2%. The S&P is up 34 points, 1.3%. The Nasdaq's up 100 points, 1.25%, and the Dow is up 268 points. But we also have gold up $5.70. Gold creeping up on the 1700 handle, trading at 1689.40. But the Euro stocks are the laggards this morning, down 1% or 28 points. The DAX is down 0.54%. The bonds are off 18 ticks. It seems like where the overnight session, the extended hour session, overnight my time, showing that the market was mostly sideways with a pretty decent range, though. With a pretty decent range, we'll go over that here in the S&Ps in a minute. In terms of what's on the calendar, there is nothing today on the calendar that is high impact. The key release to keep an eye on is at 1 Central, 2 Eastern. That is the FOMC minutes. The FOMC minutes, the market's likely to pay attention to that. Generally, this is not a mover, but it may be given the conditions that we're under now for the last meeting, for last month's meeting. We do get the EIA crude oil stocks, gasoline and distillates, and a 30-year bond auction today. That's about it for what is scheduled. Let's take a look at what was expected yesterday. Remember, yesterday was looking for mainly responsive selling. We were opening on top of this high volume node on the composite. A composite is volume that goes back to the start date of the chart. So that's the volume going back per price. This is volume per price going back, way back to that starting point on the chart. And we were opening on top of this area, and the expectation is we would take out the overnight high, which at the time was 45. We would take it out by testing up into 50, and then roll over and start filling the gap zone back in. What it did yesterday, that's pretty much right on in terms of what was expected for the market yesterday. What it did, though, was a lot more aggressive. It pushed to 2750 on the dot. There was quite a bit of liquidity there. Quite a bit of liquidity there at 2750. And then we get this impulse down like I drew yesterday. Was looking for this impulse down right here, and then a continuation impulse down again. And I was looking for 2700 and 2696 and a quarter as the key test areas below, and it pushed down and into 2678.50. It exceeded my expectation by pretty far. Then it bounces back all the way up to the opening price. It missed the opening price by 2 ticks. We opened yesterday at 39.75. It retested 38 and a quarter, and then the news came out. In case you didn't know at this point, news came out in New York that the numbers are much higher. Remember, the market really popped higher and was moving up on the idea, as I told you yesterday, on the idea that New York was seeing a flattening in the number of deaths from COVID-19, in addition to POTUS announcing that their estimates of 100 to 200,000 were a little bit on the high side in terms of deaths in the United States alone. I believe we are currently hovering around 12,000 deaths so far in the last 3 weeks, quite a bit. And then the market just took a dive from there, filled the gap, which under normal circumstances would be a lower probability play for today, given the gap size. Given the conditions in the gap size, the expectation is it's likely not to fill, but it ended up filling the gap, getting back down to the prior day's close, and we closed 1.4 ticks below yesterday's close. So what we see today, what we've got here from yesterday, is a market that has found an unfair high given current conditions, rejecting this high volume node, and has moved back into the prior day's range. So we're currently trading right up against the overnight high. We're pushing the overnight high, and it's likely to continue to do so into 2,700 this morning, expecting it to be weak, testing up, and for it to come back into this lower distribution and trade down here this morning for a bit before the next leg takes course. So, a couple of things can impact that. Mainly, whatever is said in these really long press conferences or on the news or the FOMC. And that's where we see the market responding. The market's very sensitive to this situation, this quarantine or shelter in place situation, this emergency situation. It is very sensitive to when this is going to abate and when we can get back to living our lives normally. In Congress, they are working on another bill for stimulus. But overall, in the United States, I guess the thing we've done is just throw a whole bunch of money on it, just a lot of cash, and see what happens, see how the market responds. And the market has responded, but negative news on the numbers keeps the market keeps a lid on the market because there's a huge impact. There's a huge impact on earnings and business getting back as long as this thing is not contained and a solution is not found. The day we find or announce a treatment that works or a vaccine, I think is probably going to be a limit up Globex session and a very strong day up. There's a lot of pent up energy and a lot of money on the sidelines that wants to buy in my opinion. So that's where we stand in terms of yesterday. You could see that the delta was really negative all day. Yesterday was really favoring the short side. Those of you who are Convergent in the Head Trader channel, I was talking the short side for a lot of this drop, then went neutral up here, and then looking to the short side once it fell back through the mid again. Carrying that into the overnight session. The overnight session basically was chopping around. What we have is a fairly balanced profile. I mean, we're pushing that high again right here. We had a high of 2680.50 and we just pushed to 83.75 after testing down on the European Open. The European markets, as you saw with the DAX and Eurostoxx, just taking a beating this morning, and then just went sideways. And now buyers have come back in after consolidating for most of the session. We're above mid VWAP, the point of control, and we are exploring prices higher. Again, 2,700 is a magnet up here. So the overnight session is not telling us very much other than the market was in a pretty decent balance between the 68 to the 29 area. The volume overnight is starting to migrate or starting to move closer and closer to what we would consider to be the norm for this product, which is around 150,000 or so. We had many days where it was 700 plus, 800 plus thousand, which is really outstanding, and that's that's kind of coming back to normal. So that's where the overnight session stands. The overnight inventory is mixed this morning. We've traded above and below the closing price, and you can see from the delta it's slightly positive now, but generally the volume, the number of contracts lifted versus the number of contracts hit, buyers versus sellers, is tipped to the buy side. But for most of the session, it just snaked around the zero line and is a little bit positive right now. So expecting a choppy open. Here's what the order flow shows. Looking at CT Bookmap, you can get this on ctbookmap.pro. It's pretty noisy overnight session. We did have a really solid bid down at 26.18 to 26.20, which held the low here at 26.20.75. You can see that thick red and kind of long-standing bid down here, and that held things up, and you could see it. You wouldn't be able to see it with anything other than this product here. You could see that that bid became more bullish as it moved up from 26.20 to 26.30, looking for a fill. So we could see that bid just push up right here. On the offer, we have 2,700, which has been here, not surprisingly, not for the entire session, but is getting thicker and thicker as price moves in. But those are really the key areas. It's about 100 points of range there. Those are the key areas where we see liquidity, resting liquidity or resting interest, and the market's likely to continue higher into that 2,700 given the stance that it's taken so far. So that's where we stand here in the overnight session. Let's take a quick look at what we're expecting for today. What is the most likely play for today? The most likely play is, well, let me first remind everyone that this Friday is Good Friday, April 10th. That means that tomorrow, with all the major exchanges closing for Good Friday on Friday, that means tomorrow, Thursday, we're likely to see some positioning into the close. Just be cautious tomorrow. We're likely to the market's likely to make some moves and into the close. And in preparation for a long weekend, some markets are actually closed on Monday as well. I believe, I haven't checked, but I believe Eurex is closed on Monday as well, and that's a long time in a pandemic and a news-driven environment to hold a position. So I'm expecting that before we get out of here on Thursday, that the market is likely to make some moves. So just be cautious there. Expectations for today, the primary scenarios or the big trade of the day, and of course I won't be here on Friday, as nor will anybody else, I think. But here we're pushing back into that key low that we put in yesterday, and I'm expecting that we would come in with an open auction. I'm looking for it to push higher to become responsive into 2,700, consolidate, attempt to go higher, and then I'm looking for sellers to come back in and bring us back into line. I'm expecting us back at the close. We might poke through to a new low and into 26.20. This is an area that had a lot of liquidity yesterday, and it did this morning, as I showed you, before it moved to 26.30, and then I'm looking for it to bounce back up once it tests that area. So my job this morning is to see what to glean out and pull out whatever information I can to see the quality, what the quality of the move up is going to be, if there is one. If I see lifting with a lot of absorption on the footprint or on the volume scope, then I'm looking to take a stab at the short. and look for a rotation back through the open and to the downside. That's the primary scenario. The secondary scenario is we are, above yesterday's close. We are below the key low we put in yesterday before the sell-off. We couldn't take that low out and hold it on the close. I'm expecting us to open, take out the high, move down, consolidate somewhere in the middle, then impulse up, push through the 2700, push through the 2700, pull back into the 2700 area and start moving back towards this high volume node again at 34 and a quarter where we started yesterday. Okay, so that's the secondary scenario. That's the bullish scenario. It could do so by just having a very small push down, and then it starts to move up. The key line to watch is the 2700, or actually 2696. That's the key area to watch here to see what the market is wanting to do tomorrow. Okay, so I'll leave you with those thoughts. Again, Friday's a holiday. I wish you all the best of luck today. Cheers and take care.